This episode is brought to you by Avalanche and ParaSwap. You'll hear more about them later in the show. Enjoy.
There are huge markets, like collectibles, over $100 billion a year. Art is like, John would know more, but like $65 billion a year, maybe per year. Gaming, a couple $100 billion a year. So these markets are absolutely massive, and NFTs are actually increasing the size, or going to increase the size, because what they're doing is they're increasing accessibility and just lowering frictions.
This is going to touch so many different things. Like if this standard takes off, it's sort of impossible to imagine, like Andrew said, like the biggest market in the world. This is going to be so many different things.
All right, everyone. Really interesting episode coming up. We got Santiago, per usual, as the co-host. We're also joined by Andrew Steinwold, the co-founder, or I guess just the founder, the CEO, founder of Sfermion, a $100 million venture fund. I'd probably bucket it as one of the first, or if not the first, like real just NFT metaverse fund. Pretty big names invested: Alan Howard, Chris Dixon, Mark Andreessen, Cameron and Tyler Winklevoss, DCG, Animoca Brands. You might have heard of a couple of them. Also, we've got John Crain, co-founder of SuperRare, just a all-around really great human, but also SuperRare is a marketplace for buying and selling NFTs, digital art on the, I think, mainly on the Ethereum blockchain right now, John. We can talk about that. I might be wrong. I think it also functions as a social network for artists, collectors. It's got like featured profiles and activity feed. So anyways, guys, Andrew, John, welcome to the show.
Thank you so much for having me. I really appreciate it.
Yeah, thanks for having me on. Excited for the conversation.
Of course. Andrew, I actually just want to pick on you for a second. I want to rewind the clock. You go on Bankless during the DeFi summer. This is like August or September of 2020. NFT volumes are like $1 million, $2 million a month. You said, I know DeFi is big. I know DeFi is big right now, but NFTs are going to be even larger. I remember listening to that episode like a year and a half ago and being like, this guy's a complete lunatic. I obviously had known you since the last cycle, but I was like, I don't know what this guy's seeing in these NFTs. Today, NFT volumes per month are like $1 billion and like 1.5 billion, right? It's like a 1,000x increase since you went on Bankless and said this. What gave you that conviction in NFTs way back when?
Yeah, so I originally, way back when, got involved in Bitcoin in 2013, and I've just been interested in crypto since that period, and trying different startups in blockchain and trying different things out. Launched a crypto fund in 2017, and was realizing, okay, so it was kind of thinking that this is all headed somewhere. And originally I thought, okay, we're going to transform, the US dollar, the currency, we're going to transform the financial system. That was kind of my worldview. But then when I went to NFT NYC in February of 2019, I met with one individual. His name is Jin. He goes by Jin. I don't even know his real name. And I sat down with him for like 4.5 hours at this conference, and we talked just about the metaverse and NFTs and blockchain, how all of this is connected, and how, the metaverse is now emerging because NFTs are now a thing. And NFTs just enable digital ownership. And you really need digital ownership for a metaverse to emerge. You can't have a metaverse that's like centralized or controlled by one entity like Facebook or something like that. And so when that clicked in my brain, I was like, oh my gosh, like he's 100% correct. This is going to happen no matter what. And then when I went home from the conference, and I was like Googling like stats about, okay, what societal trends are happening, what technological trends are happening that's actually going to bring this metaverse to fruition. Because back then, like I didn't even really know what like metaverse was really. And I started diving deep and looking at screen time. Like screen time all around the world is on the up and up. Started looking at gaming trends, like gaming is becoming normal. People are, the creator economy, people are earning money from streaming, from these kind of digitally native activities. And I kind of realized, okay, wow, NFTs are the missing piece, and this market will be huge because it is so approachable comparative to crypto or DeFi. Like DeFi and crypto, they're amazing, they're huge, they're so important, but really it speaks to people that are interested in finance. And NFTs, on the other hand, it's arts, which speaks to a huge amount of people. It's gaming, which speaks to a huge amount. It's collectibles, which speaks to a huge amount. And all these different markets, these sub-markets, they all touch upon like the human factor, which is like people are born to collect. People are born to signal status. People are born to feel a part of a community. And so all these things were you tie those factors into the societal trends. I was like, oh my gosh, without a doubt, this is going to be the world's biggest market because anyone, anywhere in the world with the internet can suddenly create NFTs, right? And I was just thinking, connecting all the dots and realizing, okay, this is going to be huge. That's why we set up Sfermion, or I set up Sfermion in September 2019. And, so, it was for the first 2 years, I was like, okay, people are, cause I was pitching, to raise capital and people were not really digging it. And I was thinking, okay, maybe I'm dumb. Maybe this is not like kind of going to be a big thing, but, luckily, people kind of discovered NFTs in a big way this year.
You were pitching capital in 2019, maybe early 2020. John, I remember like SuperRare launching. I think you guys founded it in 2017. It launches in 2018. Hate to break it to you, but like Crypto Kitties had basically clogged the entire Ethereum blockchain, and NFTs were entirely dead then. So I'm assuming it wasn't like the biggest launch in 2018 and 2019, and you were kind of debating whether or not this was real, or am I wrong? Like, did you just have the conviction, similar to Andrew, that this was going to be the biggest market in the world?
I don't know if I had similar conviction. I wasn't sure about the timing exactly, but when I had been in the crypto space for a little while, I was working with Consensus, so on Ethereum projects, saw what had happened with ERC20 as like, a super simple standard, right? It's like, I don't know, 60 lines of code or whatever. And just thinking about the powerful impact that had. And so when I saw the work that was happening with the NFT standard, shout out to the Dapper Labs team for putting that together. But like the gears just started turning. I was like, basically everything on the internet has a unique ID, and we're building a standard for things that have unique IDs. So I think, this is going to touch so many different things. Like if this standard takes off, it's sort of impossible to imagine, like Andrew said, like the biggest market in the world. This is going to be so many different things. And so I was like, I have to work on NFTs. Like this is, as far as like asymmetric bets go, like worst case scenario, I learned some things, launched some projects, nobody uses them. Best case scenario, it's the biggest market in the world. So, we launched. It was a lackluster launch, to say the least. There's the guy was sort of trying to raise money on and off for like 2.5 years approximately. But you could tell as soon as it did launch that there were immediately people using it, right? There were like the people who got it and understood what was happening. And so, many ups and downs, wondering like, what am I doing with my life? My wife is like, are you ever going to get a real job? Like, what's going on? You're just, trading JPEGs. But yeah, you could tell it was just like the flywheel was starting to move early on.
So that's kind of the next place I want to go is, Andrew, you're saying like you have this thesis that this will become NFTs will become the largest market in the entire world. John, you're mentioning, every single thing on the internet should have unique digital scarcity, but also right now, what everyone sees in NFTs is people just speculating on JPEGs, right? So you've got everyone speculating on JPEGs, these profile picture projects, but then some of the smartest people in the world are saying right now that NFTs will be the largest market in the world. Big gap, right? Help me bridge that gap and like take me into your guys' future here.
I think that all forms of value, whether it be digital or physical goods, will be represented on chain as an NFT. And that'll be, that'll take 10, 20 years for that to happen, but that will happen. And then also what John's talking about, these kind of separate markets. If you look at the markets that NFTs have entered today, it's art, it's collectibles, it's games, etc. These markets, the reason that NFTs have entered these markets first is that these markets are unregulated, and because of that, innovation can enter very quickly and kind of thrive. Versus, where NFTs will enter in the future, which would be insurance, IP, the music industry. We're seeing some inroads in that now, but it's still very early days. It'll be all financial contracts. Like this will happen, but again, it'll take time. But going back to these original markets, these art and collectibles and gaming, these are kind of fun, approachable markets that people already are involved with and people already understand. And so that's why like people say like NFTs are the Trojan horse to crypto mass adoption. It's because like people are already, you don't have to teach them new behaviors. It's not like, okay, there's a new DeFi protocol, there's new money like Bitcoin. It's a very small leap to teach them, hey, you play video games, you can now earn money. hey, you like art? You can now, collect it totally digitally, right? So I think that's super, super important to getting the masses on board and getting them kind of red pilled into understanding crypto on a deeper level. And then also, if you look at like those, again, these markets, which are fun and friendly, they're huge markets. Like collectibles, over $100 billion a year. Art is like, John would know more, but like $65 billion a year, maybe per year. Gaming, a couple $100 billion a year. So these markets are absolutely massive, and NFTs are actually increasing the size, or going to increase the size, because what they're doing is they're increasing accessibility and just lowering frictions. And that's what like blockchain does broadly, just lower frictions down and really turn like every market, enabling all markets to operate essentially at like the speed of light comparative to how markets operate today.
Yeah. Andrew, maybe I want to go back to something that when you were starting your fund, I mean, you both have a vision of how big NFTs could be. I think the challenge when you're thinking about what to build or invest in crypto sometimes is there's a high opportunity cost, right? There was DeFi at the time, there's investing in other layer ones, but you guys made the early adopters in believing in this thesis of NFTs. I am curious what your initial predictions were back then. And what did you get wrong along the way? Like what surprised you, or what has surprised you over the span of a year or two? And as you look forward, kind of what are the things that, because I think sometimes crypto narratives evolve very quickly, maybe perhaps faster than you think. But I am curious how you think about if you look back at what you thought, how big this could and how quickly it could evolve, and what did you get wrong?
Oh man, got a whole bunch wrong for sure. Ton of learning along the way. Okay, so when we launched in September 2019, our objective was to operate for roughly 9 to 12 months, and then build up that internal track record, and then go out and kind of speak to LPs or hopeful LPs. And when we did, we were trying to talk to people in summer of 2020, and these are like big crypto guys, right? These are people that have been in crypto for years, and I thought they would be, oh my gosh, of course, like this makes immediate sense. I want to be involved, right? It was not like that at all, right? It was a huge grind. People were, I had people straight up say, this is the stupidest thing like I've ever heard. They're like, wait a second, you're launching a fund that's going to buy Crypto Kitties? And I was like, well, not exactly Crypto Kitties, but like kind of like Crypto Kitties. And so that was a really tough pitch. It wasn't until the DeFi hype faded in fall of 2020. It was really September 2020. That's when that's like a switch was flicked, and everyone suddenly wanted to talk to me, which was like crazy, because I felt like the ugly stepchild for like a while. And then everyone wanted to learn about NFTs because the DeFi gains that were being had were kind of diminishing. And then September 2020, that's when it flicked and everything kind of changed. But so, what did I learn along the way? 2021, I had no idea that NFTs were going to take off this soon in the way that they did. I thought honestly it would take longer, and I thought it would be more of a gradual increase versus just kind of this parabolic adoption. And then even though like in reality, there's only like 4 million users total, maybe like probably less than that. So it's still, it seems parabolic because we were, back when John was involved. I mean, John's super OG, so he knows this way more than me. But I remember going on Discord to like every Discord there was, and just like knowing most people. Like you would just kind of know people. There's like 20,000 people, 30,000 people in the whole NFT community. And yeah, so I got wrong the adoption. I got wrong people's, I thought people would be very open, especially crypto people, crypto OGs, to NFTs. That was incorrect. It really took the zeitgeist or the narrative shift in order for people to really be attracted to that. And also, I got art wrong. Like I remember talking to John, and it was, I think, late summer of 2020, and talking about SuperRare. And I was thinking, because I don't know anything about art. I got into art because of NFTs. I never was into physical art. And John was telling me all about SuperRare, and I was just like, dude, I don't even know, like, why do people want art, right? So I got that wrong. People love NFT art, and will continue to do so in a major way. Gaming, I was not sure that gaming was going to be big. My area of focus originally was virtual worlds. My thought process was, metaverse, that means virtual worlds, right? And so it was a very narrow focus. But what I didn't realize is that, no, this is all kind of building towards a metaverse. And really what a metaverse means is that you just need ownership in the digital world. That's like that is like the base requirements. But in terms of like, okay, virtual world, you have a character running around and you're buying and selling goods or whatever. Sure, that's like part of the metaverse, but that is not the metaverse, like how my narrow focus was originally.
Yeah, I experienced basically the same thing, and that like I thought a lot of people were gonna like get it right away and be like, oh yeah, this is cool. Like Crypto Kitties were cool. Like, I think everyone thought they were cool. And I was like, yeah, it's gonna be art. Like everyone's gonna get it. It'll be super cool. And talked to a lot of people who are just like, I don't know, man, like you should probably like pivot and like, have you thought about like, NFTs for insurance? And I was like, you're just kind of like sitting around like, nobody gets it. Like, am I just crazy? Like, so yeah, it was pretty incredible how fast it flipped. It also very surprised, it's like,
Yeah.
I feel like Cheese Wizards were not the best for the NFT branding.
No, it did not help me fundraise.
Yeah. I am curious, what did you guys think really detonated this parabolic rise in interest in NFT? Was it COVID? Was it people just sitting around at home and, have nothing else to do and they gravitate towards the digital world? And what was different in last year where you really started to see Axie take off and OpenSea volume take off? And why didn't it happen earlier?
Yeah, I mean, I think it was a bunch of different things. Like COVID definitely played a part in it, right? We're just like sitting around a lot more. And I think what really catalyzed was like COVID kind of helped people see that NFTs was a lot more than just, Crypto Kitties. It was like, people like Andrew had like been around for a long time. These are real communities, right? That's like, people, it's like sort of absurd in Web3 to talk about. It's like community everything. But it's true, right? Like there were people, humans all around the world, it wasn't a scam. They're like entering like interesting arts being created. New game mechanics are being developed. So like a lot of building had been happening. And I feel like people just kind of were like, Crypto Kitties wasn't a thing. Like NFTs aren't a thing. And like no one was paying attention. And then people kind of like started peeling back the layers and were like, oh my God, like there's actually, interesting stuff is happening here. And so I think there was just like a lot for people to sink their teeth into. And so that was kind of like, what kind of kicked it off.
Empire is proud to be supported by Avalanche. There is a layer 1 war heating up in crypto, and Avalanche is at the center of it. Avalanche is one of the fastest smart contract platforms in the industry. I've been looking into the ecosystem recently and am honestly amazed by how fast it's growing. Here are 3 reasons why I'm so intrigued by Avalanche. Number 1, Curve and Aave, 2 of the biggest DeFi protocols, are in testing right now for Avalanche integrations. Number 2, new projects. These are not just NFT clones, AMM knockoffs, and lending protocols. These are new projects, NFT projects, play to earn games, really, really interesting stuff happening in the Avalanche ecosystem. And number 3, Binance just re-enabled C-chain integration. What in the world does this mean? This means that you, the user, can directly withdraw to your MetaMask, which previously was a pretty big user bottleneck. Thank you, Avalanche, for sponsoring Empire. We are going to continue to explore Avalanche in future episodes. Hope you enjoy it. I would recommend that you do the same. Empire is proud to be supported by ParaSwap. ParaSwap is one of the leading DEX aggregators in crypto. Let's say you're booking a flight. You would never go directly to an airline, right? You'd never go directly to United or Delta. You'd obviously go to Google Flights or Expedia or Kayak or Booking.com. That's what ParaSwap does for DeFi. ParaSwap, if you're watching on YouTube right now, you can see the platform. ParaSwap makes swapping easier, it makes it faster, it makes it cheaper by aggregating more than 80 different DEXs. Again, if you're watching on YouTube, Uniswap, Sushi, Balancer, Bancor into one single interface. You can use ParaSwap on ETH, Polygon, as you can see here, BSC. They recently launched Avalanche a few weeks ago, pretty exciting. If you are a trader listening to this, you are losing money by not using ParaSwap. And excitingly enough, if you're a company or a platform looking to access the swapping or the yield capabilities of DEXs, you can now use ParaSwap's APIs to integrate into your platform to get the full power of the DEX aggregator into your platform. So head on over to paraswap.io. Again, if you're watching on YouTube, you can see how simple it is to use. Just plug in, let's say I want to swap, 0.2 ETH. For USDT, you can see how simple it is. Just plug that in right there, and it aggregates over 80 different DEXs. So head on over to ParaSwap, ParaSwap.io to use the platform today. All right, let's get back to the show.
Yeah, and then to echo what John's saying, I think that the crypto community was primed in September to think, okay, NFTs are a thing. Because before it was absolutely not even like an option, like not even a viable market. And then after they were primed, they started to dive a little bit deeper. And then it was like late December, this is 2020, early January of 2021. I think what really happened was, COVID obviously had a big impact because people are kind of sitting at home, but it was high sales that attracted headlines and people started writing about that. And then also, what was great was NBA Top Shot and Nifty Gateway. Those are two centralized solutions. I mean, no, not, they were at the time, not, I know NBA Top Shot's like decentralizing with Flow and whatnot, but anywho, like regular people, quote unquote, like non-crypto natives could then enter the market very easily. They could just sign up with a credit card and start buying and selling these things. And it was really fun. Like, I think that trading is attractive. Like trying to flip stuff is attractive. And when you put like a good there versus like a stock or like a number, it becomes much more attractive for most people. And NBA, that's a hugely attractive thing to like most people, like that, like people love the NBA. Art, that's obviously very, very attractive. And what those two platforms did is they served as this gateway for people to then go more crypto native, so to speak. So like you start with Nifty Gateway, but then you check out SuperRare, and then you dive deep into SuperRare, and you just get like totally immersed in this whole world. And John's right. I know like the meme is like, oh, community, like, but that's actually totally valid. Like, most of my friends, which is weird, that I've made, the past couple of years has just been through NFTs. And I think a lot of people, they really form these communities and groups, and now you're kind of seeing them formalized like through DAOs and whatnot. But I think that that's a big aspect. So it's like you're trading, you're trying to make money, it's social, it's fun, it's exciting, it's weird, and so I think it was a confluence of factors that really made it go, big, huge this year.
Absolutely. Just a quick follow up to that. I mean, I think a lot of people are skeptical or are dismissive of crypto when you talk about price. But I think price is super important. As you said, I think my question to you both is, would it have been different, or what happens in a bear market? What happens when a lot of these new mints are not as successful? People start losing money. They try to sell their illiquid assets, and they realize it's not easy to get out of these things. Like, what does that do to adoption? What does it do to the existing cohort of users that, not all of them? I remember talking to Bored Apes guys, like over 50% of people had never touched crypto before, right? They just that have a Bored Apes. And I think you saw that to some extent in NFT NYC. But I am curious, like, what does a bear market look like for NFTs? And what does that do to your thesis of adoption and the excitement that exists from maybe the artist perspective, but also the user perspective?
I think we end up, I don't think it's super dissimilar kind of from like the ICO hangover period, and that, there's things without substance are going to go away. And like, it's, a lot of people will be sad. But I think you end up with like more infrastructure building happening in those periods. So I think it's, who knows when it's going to happen. I'm sure it will be painful, but I think, 2 years down the line, right, there's going to be way more interesting, again, with like SuperRare and like art, right? It's like the way to like show it off, like the display solutions that are getting built right now are super cool. Like, I think it's going to be, a ubiquitous, like everybody's going to have some kind of like NFT like showcase frame in their house. And so, I'm sure it's painful, but you'll end up, it's like this, like cycles, you have sort of like the speculator or the people who are just there for the speculation leave, people who are more interested, like on a deeper level, stick around. And people just keep on building.
Yeah, we were all there for 2018, and that was like the most depressing year, just because I felt in 2017 like, oh my gosh, now is finally the time. It's finally arrived, and like we're going to 100K. Just kind of like the whole. And then 2018 happens, and like you go to work every day, and you're just like depressed, and you're like, oh my god, like just more bad news. The price is not moving, and then it takes so long that even when good news happens, the price doesn't move, and you're like, oh my god, like this is never going back up, like it's all over. But you think those things in the back of your mind. Obviously, you're still very long-term bullish, but you're like, oh my gosh. Mm-hmm. So what happened in 2017 was that people were able to realize, wait a second, we could just have a white paper, or like, it started off as like technical papers, and then it moved into like marketing papers, and then like a one pager, and you could launch an ICO and make money. And originally it was like, okay, Golem Network, which is like a great team, like well thought out, and then like that like did really well with their ICO, and then like BAT, I think BAT, Basic Attention Token with Brave Browser, that was a big turning point in 2017 because they raised money. I tried to participate in that, and it was like, I think it sold out in like a second, and it was like 20 million or so. I forget what it was, but that made people go, oh my gosh, like we could come up with an idea and, raise money for it. And then that's when it took off. And we kind of saw the same process happen. Like history, kind of repeats itself where people realize, wait a second, I don't need to make Crypto Kitties or Cheese Wizards or SuperRare. I can just kind of come up with a cool PFP, that my brother, just made the art for, and we can launch it and hopefully make, millions of dollars. And so, which I think speculation, like as you point out, Santiago, is like speculation's like it's okay. It's normal. It's actually good. Brings a lot more attention, a lot more eyeballs, a lot more capital, a lot more talent. And so I think that these speculative cycles are normal for new markets and also new technologies. And so, we had that, and now I think it's kind of fading now. I think, the PFP era is slowly, definitely, dying down significantly. But also one interesting thing about NFTs is that the NFT markets are highly cyclical. So like summer of 2020, virtual land was all the rage, right? Fall of 2020, the zeitgeist was play to earn. And so like actually had a huge boom. And then going into the kind of the winter and winter of 2020 and 2021, it was art, and like art had a big boom. And it was also collectibles with traditional IP. And then going into the summer, it was really about collectibles with metaverse native IP, right? So it's like, we're kind of exiting that era. There's going to be some new zeitgeist, new narrative pop up, and that could happen today, tomorrow, like who knows? But it just is a constant ebb and flow cycle of like, okay, what's the hot thing? Everyone flow to that narrative, and then, the other markets will get depressed for a while, but it just kind of how these markets are, because they're super young and really, really immature.
Yeah. I guess a real quick follow up here is a lot of times I do wonder, like as an investor, and you talk to your investors, you have a fund life of 10 years or so. You touched on a few of the type of NFTs and plays that you do, and land and PFPs and perhaps infrastructure. But how do you, as an investor, how do you wrap your head around investing in these sort of things, and how do you have a fair like assessment of value, particularly if you're touching like more traditional kind of art? You mentioned you didn't come from the art world per se, but how do you think about these mental frameworks of investing in these different types of NFTs, and how do you like construct a fund around that, right? Because ultimately you're going to have to sell a lot of these things to return capital back to your investors. So what happens then?
Yeah, so we actually have two funds. Fund one is a direct asset fund, so actually buying and selling NFTs, and fund two is a venture fund, and that's investing in NFT infrastructure. So that the venture fund's kind of, that's pretty straightforward. For the fund one, really, as mentioned before, like there's many different sub-markets within NFTs, and really what you have to do is you have to assess bare bones fundamentals, because we're like, okay, what actually matters here what always matters over a long enough time period are fundamentals. So you look at the team, the product, the token economics, the community, the market, the data, the risks. And it doesn't matter if it's a PFP, doesn't matter if it's a gaming asset, doesn't matter if it's virtual land, art, etc. You assess every project on those fundamentals. And then if a project passes muster, you're like, okay, great, this is fundamentally a sound project. You dive deeper and you say, okay, what's actually driving value within this submarket? So like with gaming, what drives value is all about utility. So if my sword does 10 damage, your sword does 100 damage, your sword's going to be more valuable. For art, and this is controversial, but art is artist reputation or brand. So if I make a Banksy, no one cares. If Banksy makes the exact same piece of art, it'll sell for like $5 million, right? And then if you move on to collectibles, what drives value to the collectibles is really all about narrative or the kind of the story. And so, if you have I'll use a physical kind of baseball card analogy, but I have the one of one Babe Ruth baseball card made in 1901. It's super old. It's in pristine condition. It was graded 9.5 out of 10 from the Beckett grading scale. And, and there's a big community of baseball fans that know and love baseball. So you kind of port that same process over to CryptoPunks, which is, okay, CryptoPunks were considered the first NFTs on Ethereum. They're actually not, but they are considered that. There's only 10,000 of them. They have different levels of rarity. Now a lot of people know about CryptoPunks and know about, there's a big community of CryptoPunk people and so on and so forth. And then for virtual land, it's funny. It's the same value drivers as physical land. It's location, content, parameters. And so location, are you in Manhattan or are you in middle of Illinois on a farm? Content, you're a single family home or a skyscraper. The parameters is really like the zoning laws. So what is the height, width, length that you're allowed to build on this piece of land? And so you just take those, the same value drivers and apply that to CryptoVoxels or Sandbox or Somnium Space or Decentraland, et cetera. And again, these are our valuation metrics and like what we think drives value within these worlds based off of our experience. We could be totally wrong, right? Like this is what we're doing. This is how we're doing it. And it seems to be working out so far. And then going back to the cyclicality of the markets. So we could be, and our strategy for fund one, which is the direct asset fund, is really buy and hold. So do our homework, buy and hold, right? And because we're fundamentally, long, the metaverse and kind of these markets and these assets. And so, but if the current zeitgeist is that that submarket and your assets within that submarket are really increasing in value, we will offload opportunistically within that, that uptrend. Even though we're still long-term bullish. And then when the market gets, depressed again, we'll kind of reacquire our position there. So, we're not traders by any means. It's really kind of a long-term buy and hold, based off of homework essentially.
Andrew and John, you guys both talked about zeitgeist a bunch, like the narratives and the zeitgeist of the space and how that drives a lot of things. Obviously, PFPs, like punks and things like that, were a big driver of this bull market, like punks and things like that. Now you're seeing the floor of punks actually start to go down a little bit, which is pretty interesting to see. And you're, like John was mentioning, like you're seeing kind of the narrative change to like, or maybe Andrew mentioned this, like IP, and like obviously Nike acquired the creator studio yesterday, and Adidas is getting into NFTs with their cool little commercial with G Money, which was pretty cool to see. It feels like right now NFTs impact. Actually, Andrew, you had this fun tweet the other day. It was like, right now NFTs impact collectibles, gaming, and art. Right, and we can see that. Collectibles, you've got like PFPs and trading cards and digital fashion, gaming assets. You mentioned Axes and Zedrun, Virtual Land. You've got like Sandbox and Decentraland and things like that. You then mentioned how do NFTs impact property, insurance, finance, and then that's when it kind of gets big. And so when I see a tweet like that, like the 2017 person in me is like, this is banking on the blockchain. This is like corporate blockchain, enterprise blockchain, like NFTs for insurance, like blah, blah, blah. The other side of me is like, oh, okay, maybe I should listen to these guys, John and Andrew. They've been right every single time. All value in the world will eventually move on chain. It'll probably be in the form of NFTs. What convinced me why like the latter is right. Like why is, and maybe John, I don't know if you agree with Andrew, like NFTs eventually take over property and insurance and finance and things like that.
Yeah, absolutely. I mean, I think it's like just generally distributed ledgers, right? We have these append-only central repositories for, societal information. So it's super valuable for money, right? Like Bitcoin was like, holy shit, you could do this in actually, decentralized fashion. And there's just so many other areas where there's no, like, the information is still horrible, right? It's like, if you think about like, for example, I think real estate in the United States is a pretty close example where there's a functioning, registry of information that's public. So you have like Redfin, Zillow, they're showing you the exact same information, but it looks a little different. Where if you go like globally, real estate markets, like it's not at all like that. And so I think if you just think about like, having a central repository, it's append only, there's rules and permissioning for who can update, different bits of information that applies to, it's like, think about just like essentially all types of IP, whether it's like, stock photography or like licensing for somebody's, a character's likeness or your car title. Or so, like, I think there's just so many areas where having an easily accessible central repository for a certain type of information would be, it's hard to measure the efficiencies that would be like given to society if you had something like this, right? It's like how often it's like, where's that bit of information? It's over here, and you're like connecting the dots instead of just like, here's all the car titles. Here's all the property titles. Like it's super easy to go through. It's easy to run metrics on. I think, there's just no way that it doesn't happen.
So you're essentially talking about, it's like, it's almost like abstract, get the word NFTs out of there, get the word crypto out of there. It's like, let's just talk about using the same database, and like basically the base layer of data should be the same. And you can apply that to gaming as well, right? You have Halo, you have Halo and Call of Duty. Right now they're built on two different databases. If they're basically built on the exact same data layer, there's obviously all these efficiencies that happen between games, right? Like I was a big Halo player. You can go pick up the different skulls and improve your your gear and shit like that. And then you could eventually, maybe you could move the gear over from Halo into Call of Duty if they're built on the same data layer. And when you apply this to finance, you're saying if you apply it to real estate and insurance and financial markets, if it's all running on the exact same data layer, you have those same efficiencies. Am I getting the narrative and the thesis right a little bit?
I think so.
Okay.
John's absolutely correct. If you use a open database that people can't really go in and change, there's just massive efficiency gains you get from that, and it goes from in the IP world, the property title world, and kind of these financial contracts. That's something that we need to have. We need more transparency. We need more security there. And then with the NFT world currently, it's kind of nice to have. Gamers are still gaming without NFTs. You can still have art without NFTs, et cetera, et cetera. But the fact that if we're already living a lot of our life digitally, meaning that we're spending a lot of our time on our TVs, our phones, computers, and whatnot, then it makes sense that if we're going to buy digital goods, it makes sense that we truly own them. So you can go on Fortnite right now and buy skins and whatnot, and you don't actually truly own them. But, it's kind of I liken it to a communist system versus a capitalistic system where sure, you could move to Soviet Russia and try to start a life there and try to acquire wealth and whatnot. But it's not really going to work. You're not really allowed to own anything and do that. And you see most people in Soviet Russia, they're trying to jump over the Berlin Wall and enter the capitalistic, West. Right. And so I just see the same process now. It's for those heavy duty use cases that we mentioned before, IP, property titles, et cetera, blockchain's needed. But for the NFT ecosystem, it's not needed. You could live in this communist world we have been doing it. But now that we know that, oh my gosh, there's a Berlin Wall and you can jump over it, the guards are gone, that to me is crazy. It's oh my gosh, everyone, and now gamers hate NFTs and a lot of art people hate NFTs and blah, blah, blah. We're still super early. Most people didn't know about NFTs 12 months ago, but slowly people are going to see, oh my gosh, we can go to this world. We can, generate wealth. We can, make friends. We can do all these kind of things, that wasn't really necessarily available to us before due to this technology.
Andrew, did you just compare Web 2 and platforming to communist Russia?
100%. 100%.
Quote of the episode.
I guess Facebook, that makes Facebook the Soviet Union. I am curious, you talk about IP. There has been this recent controversy around punks, Larva Labs owning the IP for punks. And there was a very big punk collector, I think it was 4156, that decided to offload a lot of his punk collection. So I think it's just topical to understand, from an artist perspective, from a project perspective, what is this IP battle versus Creative Commons and allowing the community to build on top of that, and how much of an issue do you think that is, and how do you think that gets resolved? What is the future of NFTs look like? Is everything just going to move to Creative Commons and let people build on top of that, or what does IP mean for an artist, for a company? I am curious to get your takes there.
Yeah, it's really interesting. It was actually super hard when we first launched. We had a horrible terms of service that it was me and my co-founder Jonathan had written together, so it was terrible. And then we went out and tried to find legal counsel to help us. We're okay, it's been a couple months, this is awful, we need to fix it. And getting people to understand what was being purchased and how it worked was banging your head on a brick wall. It was so we were trying to find counsel for the longest time. And eventually we found a lawyer he's on our team. His name's Emilio, and he understood IP and understood how blockchains work. And he's oh yeah, I can help you write this. And so it's I think we have an extremely simple, straightforward terms of service that explains how it works. And I think, debating should it be open or should it be closed, I think is, it's a more philosophical question. But I think what will eventually happen is we'll kind of coalesce around almost very simple building blocks. So it's super easy to understand what are the rights immediately. It's just going to be sort of attributes that you can see. This is a collectible license. It's so I think you end up with almost the money Legos for DeFi. It'll be IP Legos where you can kind of plug and play. Yeah, some are mutually exclusive, obviously, but you can build sort of an IP licensing profile for any asset immediately and understand how it works. So I think right now we're seeing, you know, people with different opinions about like sort of like how should you know, creatives be like remunerated for like the things they're making. I think, yeah, that's up to them, right? It's like if people want to keep their IP, they should. If you want to build an open system, I think there's a lot of reasons why that's a great idea. But it, you know, it's ultimately there should just be optionality, and it should be really simple. Whereas like right now, all of this is in super dense legalese. No one actually knows what the fuck they're buying. And so we're seeing people like all of a sudden wake up and be like, oh, I thought this was different. Like, it's not what I thought it was. So I'm offended now. And I think we'll get to a place where it's going to be super exciting. It'll be very easy to see. You'll see people sort of like aggregate to what aligns with their personal philosophies around it.
John, when you think about like when you think about Lego blocks, like the first thing that comes to mind for me is DeFi actually. So you take like a trading protocol and you mash it together with a lending protocol and you get some cool DeFi stuff. This concept of IP Lego blocks is really interesting, and I see how it happens. But like, what does that actually unlock? And like, what does that enable? And like, what does the world look like, or the media space look like, or the art world look like with these IP Lego blocks that doesn't currently exist today? In the same way that with DeFi, like when you put these Lego blocks together, you can get things like Compound and Aave and Balancer and stuff like that.
Yeah, I mean, the first thing, even like with, you know, SuperRare is like, we had this very simple like royalties Lego block that's built in to the marketplace layer, but it was like, you were like, oh, let's try it. And like, it worked really well. I think we'll start to see, you know, people building out these systems where you do have really interesting kind of like real-time payments for creators, right? Like where you don't even have to actually know what's being done on the other end. Like someone's building, you know, a castle with Legos, and like somehow some NFT that you created is tied in there, and you're getting like value accrual back to yourself as the original creator. I think we'll see like, again, you know, like sort of like the Web 2, like if you think about like Spotify, how horrible it is for people to get, you know, payments for like royalties. I think we'll see a way more interesting kind of like streaming real-time payments. And I think what's interesting too is like the whole system doesn't necessarily have to be permissionless. Like I think it'll be a blended sort of legal, like old world legal with like sort of like Ethereum style smart contract infrastructure. And like most people do want to obey the law. Like if it's really easy for me to send you a royalty payment for the stock photo I used or whatever, like I probably will. I want my books to be, you know, legally in order. And so I think we're just going to see a sort of like increased velocity of this type of commerce happening. And I think that sort of like benefits everybody involved.
You guys keep talking about like bringing value, like more basically stacking value on top of NFTs. Like you're stacking IP, you're stacking maybe the ability to earn yield from your NFTs. Does this decrease the value of just the PFPs that basically don't have functionality? Like, does basically stacking value on all of these NFTs over here decrease the value of the non-functional NFTs?
Well, I think PFPs do sort of like the value in the PFP is that you get to, you know, you have it as your, you get to show it off. But I do think we'll see, like, because it's such an early market, like, are many PFP projects overvalued? Like, I would imagine so. It's like low barrier to entry. I think there's just going to be more and more of these created. So, you know, justifying, you know, $100,000 for a profile picture, you know, maybe has diminishing returns over time. So I wouldn't be surprised. Yeah.
It's almost more of like a question around like, what is the moat of these things? Like you look at any business, like Santiago, you probably saw 1,000 crypto companies at ParaFi, like Andrew, and I'm sure all of you guys have seen a whole bunch of companies. And then one of the first things you look at is like, what is the moat of this company? And when you look at NFTs, it's like the moat is usually community, and community is important, but it's not, I have trouble seeing that as like, as the real moat of these things. I don't know. Maybe I'm stuck in the old world, but like, what is the moat of these NFTs? How do you think about that?
Yeah. So like broadly, and we're talking about NFT assets. So broadly, there's two buckets of NFTs right now, and like this will bifurcate into many different types in the future. But there's functional and non-functional. So non-functional, it's like art and collectibles. It's like what you see is what you get. They don't really do anything. Art is meant to enjoy and view, and collectibles are meant to show off and kind of, kind of socialize with other collectors and whatnot. Functional is more on the potential for future yield generation in some sense. So like virtual land, you could rent out, maybe generate some yield that in that way, or you can advertise, put up a billboard and maybe, generate some yield that way. And with gaming assets, it's okay. Your sword can kill X many, this many monsters per hour. Therefore, they drop this many potions and you sell those potions for Ethereum, so on and so forth. So I think that, that there's just different strokes for different folks, in the sense that like people want different things. So it's like some people are like, I only want NFTs with functionality. I only want, to be able to generate yield from all these things. Other people are like, no, I only like art just because it's kind of, my personal passion. And it really varies. I don't think there's kind of a one size fits all. I do see people saying, hey, very quickly, hey, we need to add more functionality to our PFPs because like they don't really do anything, but our PFPs allow XYZ or blah, blah, blah. And kind of touching upon the IP, going back a little bit, like a lot of people are saying, okay, like we're going to enable anyone to build using our like new PFP product, and they have full commercial rights and whatever. And in that sense, they're kind of like trying to add more functionality to it to make it more valuable. But like at the end of the day, like who's going to be incentivized to, go to your project and then take your assets and make some new game or new process off of that IP? It's like, unless they have huge bags, like they're probably not very incentivized. Like it's kind of like how we saw with Loot, which I thought was a really, really sweet idea. But in terms of like everyone saying, oh yeah, we're going to build all this incredible stuff on it. I haven't really seen too much like major built on it. Just because it's like, well, who's incentivized to do so? It's much more cost effective for yourself and time effective to go make your own project and just make it like a better Loot or whatnot. And then really quick to touch upon the IP, like I don't see how, there's been a whole bunch of chatter on Twitter, how people are like, wait a second, we don't have full rights to this. Like this is bullshit, whatever. I think that's totally like fine. And you can have that opinion, but like you just take that into your calculus when you're buying the asset. Like, if I buy a pair of Nike sneakers, sure, I truly own these Nike sneakers, like they're mine and no one can take them from me. But like, I can't go make Nike clothing and like, I can't go like that's normal. And so why do people think that, okay, I truly own this NFT. Therefore, like, why can't I make a whole game or commercialize this NFT? It's just like, well, that's just how I don't really know. It's how the world kind of works. So, I think that, again, it just goes like different people are into different things. It really depends on what you're kind of targeting.
Also, like commercial rights in and of themselves are not valuable. Like the right to commercialize something, like it's only valuable if the thing you want to commercialize is interesting to begin with. So it's like, if you have a shitty project to start, giving out commercial rights with it won't magically add value to it.
Yeah. You actually touched on something that I want to ask you both, which is I like to think that, we think about NFTs as the ability to, crypto as a whole allows you to have digital scarcity. NFTs capture sort of this goodwill, this idea of differentiating of your digital identity. It's super powerful, this idea of before you could have just taken a picture and there was no ability to register that in an immutable ledger that proves provenance, and that's super powerful. But my question to you both is, how much do you think that NFT value is because of scarcity? Or should we be thinking about the future of NFTs in a mindset of abundance, meaning these virtual worlds are abundant, like gaming, like, should we have scarce land? Should we have fixed finite amount of NFTs? Or is the real value just this, that everything, as you guys say, will be expressed as an NFT and really unshackle this sort of idea that like value comes from scarcity, not so much utility and abundance?
That's a really good question. It's super, it depends. To answer your question, it depends because there's so many different sub-markets. And so for some people, they want, it really depends on the asset that it's scarce. For others, it does not. If you look at like virtual land, most virtual worlds today, they have fixed land supply. That leads to a lot of like, San Francisco type problems where like the baseline cost for a simple piece of land is like thousands of dollars. Then you have Nifty Islands, which is coming out, which, they introduce a unlimited land supply. So right when you join, you automatically get a piece of land. And so I think, and like, not to say one's better versus the other. So like, I go to Tokyo to get Tokyo culture and Tokyo vibes. I go to Paris for those vibes. I go to Chicago for those vibes, right? So like, that's how it's going to be inside, the metaverse, where like, you go to different areas. And when I say go, I mean like you visit different websites and whatnot and interact with different communities, but you go to these different areas for different reasons. So it's like, hey, I want to maximize my yield. Oh, I want to join this great community. Oh, I want to collect this one of one art. So it really depends on what your objectives are.
Yeah, I think, like, again, it's kind of like the IP rights where like scarcity can add value, but it's not the only value driver. The early X copies are awesome because you can't go back in time and, make two on the same day, right? So there's like the age part's really interesting, especially with art in that context. So yeah, I think it's relative to the whole ecosystem. Like it can, but it's not the only thing that I don't necessarily think new pieces of art from an artist diminish the supply. Like, I mean, maybe if you were just looking at the numbers, but like also what is it like, is that piece of art scarce in another way? Like, there's like a lot of different layers.
Yeah. Not to put you on the spot, but the company SuperRare implies rarity and scarcity. But no, I agree with you guys. There's so many different use cases that some will be scarce, some will not, and utility will be applicable to some and not others. I know we have you for a few minutes. We'd like to move on to just fire around questions before we go. The first one to both is, which NFT, one, if you had to pick one that you can only keep, which one and why?
I would keep my X copy, just because he was sort of like this artist who I loved, who I couldn't really collect his art before, and then with NFTs, it was this like massive unlock. So shout out to X copy.
I would keep my CryptoVoxels Andrew name tag, because CryptoVoxels is the project that got me really deeply involved in the NFT ecosystem. And then getting my name Andrew was really kind of important to me, even though back at the time there's like 100 people. So like I was easily going to get it because there were no other Andrews. But yeah, I would say that.
Second question. What are you most excited that you want to see built but hasn't been built in NFT world or metaverse?
I want really good. I think soon we'll have good display solutions, like really cool NFT frames. But we're not quite there yet. So the moment I can seamlessly show off my huge collection, it's gonna be awesome.
Yeah, I would say some method for regular people, like non-crypto natives, to interact with NFTs in non-centralized ways. So like I want it to be fully decentralized and have that true ownership, but I want the experience, the wallet experience, to be really simple. Not have to like go sign up for Coinbase and go do this and go do that and blah, 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 and seed phrase. Just like I want a simple process that regular people can sign up, have true ownership, and really get involved.
Question for John, it's what would be your best advice for an artist? And Andrew, what would be your best advice for a collector? In your years of absorbing this world and perhaps being one of the premier experts in the space.
Yeah, for the artist, I would say, and Coldy famously tells a lot of people there, he used to preach the gospel in Discord, but like, you should be making art for the sake of making the art. Like, if you're like, come into the space with that mindset, like, don't worry about how many pieces you're selling, like, just make cool art, make friends, and actually join the community. I think you'll just naturally have success. Whereas like, if you come into it, like thinking about like, got to keep my price up, and it's like, you're just thinking about financial gains, it'll be much more challenging to succeed. So just make art, think about the sales secondary.
Yeah, so a collector is different than an investor. So a collector, it's simple, just like love the art, like just love what you're collecting. It's as simple as that. As an investor, if you're trying to target ROI on a piece of art, really you want to look at the artist's track record and see how consistent they are and see how well they market themselves, and really look at the growth of their socials and kind of dive into more of like the data side and then interact with them, one-on-one to kind of see how they are as just as a person. Because you don't want to start, really diving deep and making a position with some artist if they're a terrible person, obviously.
Andrew, this was awesome. If folks want to reach Andrew, he's at Andrew Steinwold on Twitter. John, really appreciate the time as well. At, I think, SuperRare John on Twitter. And also superrare.com. Go buy some artwork. So, guys, thank you so much. Santiago, as always, thank you for co-hosting. Andrew, John, have a great rest of the day, guys.
Jen, it's always a pleasure.
See you guys. Thanks for everything.
Thanks, guys. See ya.
Thanks so much.